Okay, so today what we're going to be doing is another video talking about a few interesting technical things. So firstly, what I actually wanted to do was address something that I actually saw as a complete oversight. So as some of you may know, on my YouTube channel, I spend quite a lot of time doing things called the Technical Tuesday videos. So our main goal with this episode was to be able to spread a quick 10-minute video of just something interesting that could help you on your charts if you were trading things like stocks, commodities, Forex. For myself, that's what I focus on. As you all know, I run an investment group and I also run a training academy where we train students in 27 countries around the world. So for myself, this is something I'm able to use in order to communicate with all of you and just show you a few, tips and tricks and pieces of information that would be able to help you throughout your week of trading. So effectively, what we're going to be doing in this is just showing you a few interesting pieces of information on two different strategies that I want to show you. So specifically, the first one's going to be talking about some stuff to do with just simple trend lines and how I'm going to show you some of my simple technical analysis. And then the next one is going to be talking about having a look at buy-sell volatility. Now, buy-sell volatility is something quite simple that I use quite a lot, and a huge amount of traders use it as well. So, a huge amount of things that I've learned, also professional traders use. So these are going to be techniques that you can try out, that you can use and practice, and they're going to apply to many different types of instruments. Now, one thing I did want to address is the Technical Tuesday name that we came up for this episode. I actually had absolutely no idea that there was another company out on YouTube that was posting the same videos. Now, they've been posting for a huge amount of time. And for myself, I didn't really want to have an episode that was very similar to another company out there. Now, the company in question, I'm not, wanting to be associated with them. I'm not very impressed with their track record and some of the reviews that are online. So we are definitely going to be changing the name as soon as possible. I don't know what I'm going to be naming it. Make sure that if you have an idea for something that we can name this, put it in the comments down below. It would be quite interesting to hear what you think we should name this episode, but I'm still definitely going to be doing it. So just on the trading charts, what we're going to be focusing on at first is having a look at the Aussie dollar US dollar on the weekly chart. So I'm just quickly going to jump onto the Aussie dollar US dollar. So specifically is going to be something that I just wanted to show you in terms of how I would approach the technical analysis for this, and also having a look at some of the information with regards to flipping between two different templates on the chart. So in terms of this chart, we're on the weekly time frame. So this is once again the Aussie dollar US dollar, and this is going to be just spending some time having a look at some of the trends that I've been able to spot. So specifically, what I like to focus on is adding in a few trend lines and seeing what sort of trend lines are popping up. Now, in terms of currencies, I tend to find that trend lines work a lot better than on something like on trading stocks or maybe trading indices or other sorts of momentum asset classes. In terms of currencies, especially fiat currencies, not necessarily Bitcoin, with the fiat currencies, these currencies are mainly regulated. So it's not as if the currency is going to constantly be moving in one direction. These currencies balance against each other, and that's really what you're going to be seeing on the charts. Now, obviously, that is going to be forming based on certain types of trend lines and certain behavioral patterns. Now, that is most importantly, the big reason why using trend lines is going to be something that helps a lot in terms of the technical analysis. So I'm going to be showing you how I mainly put down the trend lines and specifically what I focus on, because a lot of people ask me questions saying, where should I be putting the trend lines? Should I be putting them on the candles and the wicks, etc.? And also talking about how far back you should go on the time frame. So over here, what I've basically got is going all the way back to about 1997, right on the very left-hand side of the screen. And more specifically, you're going to be seeing the orange lines are the trend lines. So these are effectively the lines that are moving in certain degrees and not horizontal or vertical. And more specifically, what I've had a look here is there is a support level that's formed over here. So what you'd consider this is just a low of this area, followed by a very strong spike lower down, and this was over in the 2008 time during the financial crisis, so 2007 to 2008. That was the financial crisis. So that is going to be something that we can consider as a very volatile period. But once you take that specific trend line and you basically just draw between those 2 points, so I'm specifically taking that previous level, so we can call that support level 1, and then the second level in 2007, 2008 as support level 2. If we draw that and we extend it far beyond, as we can see in the current period, so in the last 3 years worth of trading, you can see that on the charts, the trend line has been obeyed very closely on price action. So just zooming in a little bit, you can see that price action has moved up to this trend line and has tested it on 3 occasions on the resistance level. Now, this is more specifically why going way back in the time frame, especially going back to times like 1997 on a weekly chart, is very important. Because what you can necessarily see is if you don't go back that far, you might not be able to spot something like this. So back onto the charts, the next point is also going to be showing this level over here. So much lower down, we can see that more recently in the last 3 years, there has definitely been a very strong level of support right over here. Now, in terms of that level, that is going to be a very important aspect, because if we move outwards and we extend this line back, it's going to show us that price action has never previously moved into this level. So the reason why that's important to draw that lower line is specifically because the upper orange resistance level, which is the support resistance, past support, future resistance, is supported by data going all the way back to way back in the year 2000. So we had that support level in 2000, the support level again in 2007, 2008. But now this new support level has not had any price action previously formed down to that level. So we not necessarily consider it an incredibly strong support level, and that is specifically why we can see that price action has broken below that level. So I'd consider it as a weaker support level and the other level as a much stronger support level. So in terms of that, the next step would also be having a look at any other historic levels that I can find. So another one is going to be having a look at if this level does form up, and what we can actually see on this trend line is that price action has tested on this upper limit here, this upper limit again right in this area. So I can just use where I'm explaining myself so we can see that price action is tested there on the resistance, it's tested there. And then in this area over here, let's just make this rectangle slightly smaller. We can see price action is tested here, here, and let's just do one more time, test it again, and then broken down on the third time that the support level got tested. Now, if we move all the way to this level, we can see that there was a convergence point. So a convergence point can also be something that a technical trader can use really well. So what that specifically means is when two trend lines are basically moving in a certain direction and they're crossing at a specific level. Now, what we can see right there is that there is that historic level going all the way back from 2000, 2007, and now tested again right in the beginning of 2018. And then we've got this other level here back in 2007, which formed as a resistance, but that trend line is moving all the way down. So we can see some resistance level up top here. We can see another support level right before there is a break below. And then as price comes back down, the more recent pricing is testing that level. So that's also important, because when you can say to yourself you're hitting a convergence level, that could have been a great opportunity to trade. And this is why trading on trend lines, and also when you use to analyze them going back historically, is very important. So that's just a simple breakdown of exactly why you should be going back historically. And that's just a simple tip that you can use when you are analyzing on the charts. So just take the time, please, for me to have a look at, let's say, for example, a few FX pairs. So whatever different FX pairs you can find, and try and see if you can find those convergence points. So that basically means when two trend lines are crossing against each other, but you can see that price action tests that level and rejects the price level. So meaning it doesn't go through both the levels, it actually pulls back from it. So then the next big one that I'm going to be showing you just as a simple tip is specifically talking about how I'm able to show buy and sell volatility. Now, what buy and sell volatility effectively means is if a chart is going in one single direction all the way up, that means there's no sell volatility, because there's no price action that's moving downward. It basically means there's only buy action. So as an example, back in 2017, Bitcoin was a great example of buy-only action because the price of Bitcoin was just rising through the roof. Now, more recently in 2018, there's a lot of buy-sell volatility because there's lots of buyers and sellers moving through the market. More specifically, why when you look at stocks, there's not a lot of buy-sell volatility. Let's take Google, for example. Google, for periods of times, has gone through volatility, but at certain periods of times as well. I remember back in, I think it was 2016 to 2017, they came out with really good record numbers. And basically what happened with, especially to do with some of the products they had released, you just saw the stock price soar through the roof. And that was specifically because most of the people buying up the stock didn't want to sell it back to the market. So there was much more buyers and much less sellers. In terms of currencies, you're going to have buyers and sellers all the time. Currencies are regulated by the central banks of each of the countries that govern those currencies. So the ECB, the Federal Reserve, the Bank of Japan, the Bank of England, etc. So you're going to have that buy and sell volatility. And in terms of that, we're transacting all the time. So let's say, for example, one of my students pays me in dollars. That means that those dollars get converted into, let's say, for example, into the South African rand because I live in South Africa. So that means that I've sold off my dollars and I've bought up my rand. That is a transaction. And there are millions of these transactions occurring throughout the day. So on the chart, if I take a simple example of the NASDAQ 100, so this is an indice, this is basically showing how there's only buy-side volatility. So you can effectively see that if I put down a trend line here, there is only price action moving upward. There was a period of time right over here back in 2015 where there was a little bit of down spike, but as you can see, it has been a one-direction scenario. Now, in terms of trying to identify buy-sell volatility, I use two simple EMAs. So I use a 150 period EMA and a 300 period EMA. So the orange EMA is 150 and the blue EMA is 300. So you can see it's 300 exponential and I apply it to the close of the candle. So this specifically shows me that for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 years, the price action has been above both indicators. So what this effectively shows me is that the moving averages of the last 150 periods and last 300 periods has been below where the price has actually been, meaning that there's only buy-side volatility. So think of it this way, if there is only buy-side volatility, should I be shorting this asset class? No, I shouldn't be selling into this asset class. Perhaps I should be trying to wait for the opportunity to actually buy into this asset class because there is what? Only buy-side volatility. There's no sell-side volatility. But let's say, for example, I go onto something like this, a currency pair, the Euro CAD. So you can see that there is on the weekly chart a huge amount of volatility moving up and down. So if I just took a simple horizontal line and I put as the upper limit there and the lower limit here, and then I put two tighter levels over here and over here, what you can see is that most price action is moving right within these two inner horizontal levels. So that effectively shows me that price action is moving on the weekly chart up and down a huge amount. So it's not like the previous asset class, the NASDAQ 100, where it's only one direction. There's only buy-side volatility, specifically because everyone investing in that is seeing that they should be buying that asset and holding it for a long period of time. This currency, well, these two currencies governed against each other are going to be experiencing a lot of buy and sell. Now, the factors contributing to the buy and sell is a very long list. Everything from inflation to interest rates, how the central banks of those countries are governing their currencies, and things to do with their economies, how the trade relationships with other countries around the world are taking place. But specifically on the Euro CAD, it's going to be those two currencies. So just laying down the two simple EMAs on the 150 and 300 day EMA, you're going to be able to see how there is price action that is below and above both of these EMAs. So what that basically means is there is a balance of buy and sell volatility. Now, if I took simple rectangles and I identified where the strong levels of buy and sell volatility are, I would be able to use the blue boxes to show you where the sell volatility is showing very strongly, and I'd be able to also put in some different rectangles for the upper limit. So These 5 rectangles are effectively showing me that there is periods of sell volatility for a long period of time. Now, if I took a different color rectangle and I went to the upper limit, let's just say, for example, I change it to a different color. I'm going to go with orange. You can see now that there is definitely multiple different areas where there is buy-side volatility. But as you can see, there is still multiple periods on the sell side as well. So if you can see here, what have we got? We've got 5 rectangles at the bottom and 5 rectangles at the top. So think of how simple this really is. I have 5 rectangles identifying sell side volatility below those EMAs and 5 rectangles above those EMAs. So what does that explain to you? That there is a balance of buy and sell volatility, meaning that this currency pair is very balanced. So these two currencies against each other, although showing a large amount of volatility, are effectively balancing against each other. So think of it this way. If price action moves way below both these EMAs and moves into a very, very oversold area, what do you think to yourself? Do you think that it's going to continue to move, continue to become more oversold, or do you think the price action is going to reverse direction and begin moving bullish into the buy side area? Well, what this simple strategy just uses is to show you that there is a balance between buy and sell volatility. Now, what I've put on the chart here is the euro against the Swedish krona. So this is a completely different currency pair against the euro. So the previous one was euro CAD, and this is just going to be the euro SEK. So EUR-SEK. As you can see here, putting on the EMAs, we can only see buy side volatility. So what this effectively means on this currency pair, a different currency pair, but still against the euro, is that the Swedish krona has continued to weaken against the euro for a long period of time. So what does this help us realize? On the euro CAD, we have a strong balance of buy and sell volatility, but on the euro SEK, on the Swedish krona, there is no sell side volatility moving all the way back to a period of 2013. Now, obviously, you can go back a lot further on this chart and have a look if way back in the past there was a period of time, but right now there is only buy side volatility. So just think to yourself, is there a good opportunity to go and short sell this asset class, this specific currency, if there is no sell side volatility? It just doesn't make sense. If you go onto the euro CAD when there's such a good balance between buy and sell, when the market is moving very low into that sell side area, being able to buy up the currency when you identify a good opportunity is a great idea. But once again, it's not that simple. This is just a simple tip that you are able to use. So for yourself, once again, like I said in the previous one, make sure to see if you are able to spot those convergence points. Convergence points are quite simple to look for and they work really, really well. Now, this is going to be a tip number 2. Set up a template on MetaTrader for yourself with a 150 period EMA, an exponential moving average, and a 300 period EMA. And spend your time to try and find certain currency pairs that have a good balance between buy and sell volatility on the daily or weekly charts. Now, if you go into the smaller time frames like the hourly time frames, sometimes you can get caught out because although there might be a balance, something very big might come out and force the currency pair to stay on a buy side for a longer period of time. On the daily and the weekly time frames, you can see a larger, almost macro overview of the movements moving between. But once again, it's a simple way to say to yourself, if you find an asset class that you want to short and there is absolutely no sell side volatility, you have to be very careful because that shows you that the currency pair or that asset class has not moved into a sell side volatility area for a long period of time. But if it does and you want to short that asset class, now you have a simple reasoning. So everyone, I hope those 2 simple tips are going to be tips that you are able to use and practice over this weekend or throughout the week. And once again, I wanted to just announce another thing. In the previous video, we had a lot of great engagement. I did a traders Q&A video where I addressed a lot of really important questions about trading in the financial markets. But right at the end of the video, I gave out a really big opportunity to everyone who would like to join the MSE Trading Academy and learn about how to trade and invest in the financial markets. So all you need to do is you need to get in contact with us, email study@msequitiestrading.com. And what you get access to is this picture I'm about to pop up now. So basically what we are going to be doing for the next month from July through to August, we're doing a huge promotion. So no longer will you need to pay $850 to join our academy. You only have to pay $150. But what this means is that you have to be a first come, first serve kind of person. The first 60 people to email my team and request access to the program and pay on their account via our PayPal company account gets full access to the academy. There is only going to be 60 seats available, so if you want one of them, make sure to get in contact with us. Lastly, also make sure if you want to keep updated on weekly educational content that's completely free of charge, make sure to subscribe to this channel and also have a look in the video library. There is over 101 videos. This will be the 101st video available for you to look through that you can use for your educational purposes. Once again, everyone, thank you so much for tuning into this video, and I will see you in the next one. Cheers for now.